Today I'm going to be covering a smart money breakout strategy. I'm going to be covering the difference between retail traders and pro traders. So why 90% of traders lose on breakouts. And so if you have tried a breakout trade and have failed and you wondered why, this video is for you. So let's go ahead, dive in, and let's get started here. So how to trade with smart money liquidity. So the brutal reality of this is that the timing is everything. Most breakout traders don't lose because they can't draw a support line or a resistance line. They lose because they enter the exact moment professional traders need liquidity to fill their sell orders. So retail entry, they figure out, okay, I'm going to trade at the breakout candle. A pro entry is going to trade when it is reclaimed. That is the difference between the two. That is the difference between a profitable trader and a trader who is going to lose most of the time. Your stop loss is not protection. It is a magnet. Smart money hunts liquidity clusters before the real move actually begins. So the smart money mechanics. So how does this all work on the chart? Well, fuel versus engines. Think about this in terms of fuel versus an actual engine of a car. So retail orders, that's going to be the fuel that is going to be the fuel that is coming in. Breakouts create emotional buying in tight stop placements. People like to put their stop losses close as soon as that breakout candle enters. Smart money, that's going to be the actual engine that's driving the market. Institutions need massive liquidity to fill their positions without slipping the price. So, and the third, let me move myself up here, the swap. They sell into your breakout buy orders and then buy your panic sell stops. So let me say that again. They sell into your breakout. So once there is a breakout, they're actually selling that breakout. So now, boom, all of that it goes right into your stop loss. As soon as the retail trader gets into that nice, beautiful breakout candle, I've seen it again. I've been there. Comes right back in, grabs the liquidity and stops everybody out. So the breakout trap formula. This is the exact formula, guys. This isn't something that's just made up. This is the exact formula that they are using, right? Big money traders, bank traders, they're using to take the retail's money. So there's a break, price pushes past a resistance or a support line, then there's going to be a fake. Price stalls and then it dumps right back in. And then the sweep, it takes out all of the stop losses. So as soon as there's a fake, there's a sweep. That's where all the stop losses are triggered. That's where the retail traders say, darn, I'm out, I lost, let me try again, and then reclaim. Price closes back inside, and then the real move begins. You guys do not want to be in this number two fake position. And I'm telling you, there is so many different ways. There's so many different ways to wait for a actual real move and go with the big money traders. So that is if you want to write, if you want to say that, if you want to write that down, that is exactly the playbook. And speaking of the playbook, this is what's happening. You get the entry, you wait. This is exactly what you want to do to follow the big money. Wait for the reclaim. Enter only after price closes back above the fake out level. So if there is a big strong candle, you want to go and wait for it to get reclaimed, and then that is where you would be in an entry, right? And pretty, I mean, it's not really isn't a science behind it, but you just don't. If you see a strong breakout, a lot of retail traders will just jump in because they just get so excited about that breakout. But at the end of the day, you saw the formula that they use. You have to wait for a reclaim. And sometimes it won't happen. Sometimes it'll actually would just keep going, right? And there isn't really this isn't going to be 100% of the time where if there's a breakout, it's gonna stop everybody out. No, it could have already happened. You just didn't know it. But a lot of the times, that is the formula. So stop loss, where are you going to put your stop loss? Place the stop below the sweep low. So as soon as it sweeps down, you're going to see it. You're going to actually see where that price is. Do not use the breakout candle. Don't use the first candle. Use this one that was swept below it. Once you place your stop loss below it, that's going to be where you want to get out if it does continue to move down. And then obviously target, there's going to be prior highs, and then a measured move range height or projected upward. That's going to be target number one, and then that's going to be target number two. Now, I've built several tools that does this. The number one tool that comes to mind is the tear line indicator, which is literally I tell it to, as soon as there is a breakout of a trend line, right? A lot of retail traders, including myself early on, as soon as I saw that breakout candle, I would get in, right? Well, now I have it where it actually waits for one, two, three, however many candles that you would want. Usually I have it set as default as 4. So I want to wait for 4 candles. So I'm waiting a little bit longer. Sometimes I might even miss. But the reality is you're not going to get swept, right? Most likely. You still could, right? There is, again, with trading, if somebody tells you there's a guarantee, run the other way because there is no guarantees. However, it does a really good job with that. There's a lot of tools that I've built, my team has built, and there's a lot of different cool things that we're doing here at Find Better Trade. So if you are watching and liking this video, go ahead and give us a quick little thumbs up, first of all, and also subscribe to the channel because I'm going to have several different videos like this. I'm going to be talking about tools that we're creating, dashboards we're creating, scanners we're doing to get you into some better trades and not trades where you're getting faked out and getting crushed by the big money traders. So here we go. Here, let's go on the checklist. So a checklist will be fake breakout. So so basically this is something that you can just copy this, write these down. This is going to be a checklist for you to determine is this going to happen to you, right? So number one, fake breakout. Did the price break and fail? Number two, reentry. Did it dump back into the range? Number three, a sweep. Did it take out the local lows, the very recent lows? Number four, confirmation. Did we get a candle close back inside? And then number five, which isn't what a lot of folks are even looking at sometimes, is volume. Is the volume increasing? Because when you start to see that increase, that's what you want. You want volume. You want to be trading in volume. When there's low volume, not a lot of good things happen. You gotta trade with the volume in your direction. So discipline check. If you don't see the sweep, you don't take the trade. So if you see a breakout candle and you don't know if it actually was a sweep, just don't take it then. Just avoid it. Move on to the next one. There's always going to be other trades for you. Live examples to the clean reclaim resistance, right? Clear, ceiling, establish, trap, and this is more of like a cheat sheet of how it would actually. So I said live, but this is more of like a cheat sheet, right? So, but this is a good example, right? You're going to see a breakout and then a reclaim. So essentially, what you want to do is you want to wait for it to retrace to where it broke out, get in there, and then follow the trade in that direction. And again, resistance, the trap, reclaim, and then you can even do a 1 to 4 risk reward ratio. That would be a really good target risk reward. So capital destroyers. What are the 4 things that destroys your capital? FOMO entries. We've all been there. You guys been there? I've been there. Fear of missing out, FOMO. Buying the very first breakout candle. Number 2, too tight of a stop loss. Sometimes you get a little too, this just, I don't want to risk too much, so I'm going to place a stop loss here, and the price just does not have time to, to just do anything, and it just stops you right out. Anticipation, entering before the candle closes. You always want to wait for a candle close, specifically on a higher time frame. If you want to do it on the hourly, the 4 hour, the daily, look at the higher time frames and wait for those closes. And then low volume. Trading this setup during lunch hours or holidays, traps require liquidity. Without volume, price is really just going to chop back and forth and back and forth. That's a very dangerous game if you're trying to trade those back and forths. High probability conditions. So when to strike. The higher time frames, like I said, 4 hour are the daily levels for maximum reliability. Right? This isn't rocket science. Get off of that 1 minute chart. Get off of that 5 minute chart. Those are okay. A time and place for those. But if you're really wanting to know what the market is going to do for the next, day, 2, 5, 10 days from now, you got to be on the higher time frames. Those are the levels that you're going to want to pay attention to. Volume spikes. Look for a massive volume on the reclaim candle, and trend continuation is a strategy where works best as a continuation pattern disguised as a reversal. So that is the high probability conditions, higher time frames. Look for the volume, and then a trend continuation. Is the trend going up? Right? You're going to want to wait for that breakout, pull back, and then continue on with the trade. So if this was interesting at all, and you're watching this video, whether it's now or whether it's later, we have a really cool signal. Speaking of a breakout signal, there is a potential massive breakout signal with one of our systems. We're calling it the 2026 Crypto Awakening signal. So if you're here in 2026, um, this is important. This is one that you're going to want to pay attention to. I'm going to have a link to this. You can check it out if you want in the description. If not, all good. But I appreciate you guys staying with me this long. I would love for you to subscribe, give out a quick little thumbs up if you enjoyed this video, and I will catch you guys in the next one.